Welcome to Inspiring Perspectives, a podcast by thinkPARALLAX featuring fresh takes and bold ideas for the real world's sustainability challenges and solutions at some of the world's most respected brands and companies. I'm your host, Derek Sabori, and this is what sustainability sounds like today. Well, hey everyone, welcome to Inspiring Perspectives. I'm Derek Sabori, and today I'm here with Brad Stevenson, founder and CEO of Premiums for the Planet. Hey Brad, welcome to the show.
Hey, thank you, Derek. Really glad to be here.
I'm glad you're here. Thanks so much for being here. You're building a movement to harness the power of insurance to protect our world. That is a super feat, no easy task, I'm sure, but funny enough, what I've come to learn, though, is you have a resume that goes even far beyond that. So I want to start there because, Brad, you've coached, you've consulted, you've led organizations ranging from Fortune 20 multinationals to nonprofits, small businesses, and startups. You've founded your own ventures, this one included. But in addition to that, you're a published travel photographer, a writer. You've sailed from Florida through the North Caribbean and across the Atlantic. You've biked unsupported through Southeast Asia. You've ridden a Royal Enfield, cool motorcycle through India. You've kayaked the waters of Tonga. Anything else since then? What else has been on your list here since you last wrote that?
Oh my gosh. Well, I think in the vein of, you probably want to talk about the most exciting thing, which is the insurance part, right?
Yeah, well, that's my question was, how in the world, after doing all that, how in the world did you get into insurance sales, basically? Because now, now we can, if we tidy this all up, you're an insurance salesman or a salesperson, I would guess, but it's deeper than that. So yeah, tell me a little bit about that. How'd you get into this space?
Thanks. So, I mean, related to your question, and actually what landed me into the climate finance space was a long time one of my best friends and business partners who's actually struggling with cancer. Mm-hmm. That led to a film around purpose, passion, and perseverance in the context of limited time, where you come against your mortality and you realize there are things not only worth doing, but that you should do now, even if now isn't always the best time. And that film was around an expedition to an unclimbed peak in remote Nepal. And it led to a relationship with a bank that was interested in the film, that led to being at the intersection of climate and finance and seeing this massive hidden in plain sight lever of our financial system that once you see it and you understand it, you can't unsee it. And so that start in banking is what led to this work in insurance. Which we recognized as an even more powerful potentially and more impactable, more changeable lever and opportunity for creating a more just and habitable planet. And that's the long story of the...
Yeah, that was pretty short. I know there's a lot in there to unpack for sure. And I can put some of the links in there to some of those projects and the work that you're doing in that space. And I want to touch on, though, I think I'm fascinated by financed emissions right now because for me, when I was at Sustainable Brands last year, and I've brought this up on the show before, but finance emissions, for those that don't know, these are the emissions that are indirectly linked to the lending and investment activities of financial institutions. Is that fair to say?
It's fair to say, but I need to highlight when anybody says fascinated by financed emissions, yeah. That is immediately entertaining. I even heard somebody once say they were passionate about insurance.
Well, I guess fascinated by it because I've been in sustainability work for a long time. And for me, that was one of the first things that came onto my radar that I was just like, you knock your head going, why did we not see this? It was a presentation by Paul Moinister of Topo Finance and Duncan Meisel at Clean Creatives, who we had on the show actually after that because I just said, hey, I want you to come share the work that you're doing. But I wonder, you've been doing this for a long time, Brad. Because sort of financed emissions is sort of a hotter topic now, it seems like it's gaining traction. Does this feel like an I told you so kind of moment? Is it as hot of a topic as I'm feeling like it is?
It is a really hot topic because it's increasingly recognized as arguably the most important area that we can impact, but it's also been the most overlooked. And yeah, Duncan and Paul are amazing partners. Paul's been an advisor, and we were actually involved together in the banking work from the earliest days of this, around 2017, 18. But yeah, I don't know if it's an I told you so, because I've been along on the same journey. Like, this came to me not that long ago, that wow, of all the things that we're doing that might be more inspiring or passion producing, or, insurance and banking, 401k, these sort of areas of our day-to-day lives and our business practices, they're often just sort of, it's like these massive solutions that I would say are hidden as administrative costs in our businesses. And they're areas that we often spend as little time as possible dealing with to get onto the things that seem more critical. But if you start to peel the layers of the onion back, these are the things that fundamentally drive the direction and shape the foundation of a market economy. And the market economy is what's driving all of these sustainability challenges and how we approach that. So,
well, let's drill in a little bit and let's talk about insurance specifically. Why does an organization like Premiums for the Planet need to exist? What was the catalyst here? What was your sort of aha moment where you just said, "Hey, I've got to do this"?
Yeah, thanks for asking. Premiums for the Planet exists because when I saw the power and influence that the insurance industry has, and how entrenched the status quo is, and the system that we have, I couldn't unsee that. So to put some numbers to that, the global market for insurance, the insurance premiums that we all collectively send to insurers, is over $7 trillion.
Wow.
Annually.
Significant.
If you were to measure it against GDP, it would be the third largest country in the world, behind America and the United States and China. So it's a big deal. And that's what's on the surface, right? We can say, well, wow, that's a lot of money that gets invested in something every year. And, that insurance companies are taking that money, and a significant portion of it gets invested to make returns that, ideally or better for them than they're paying out in claims, which is the sort of foundation of the way that works as a business model. But what's even more impactful and maybe less obvious is that insurance companies, insurance carriers specifically, they're deciding what to insure or not insure, and how they insure those things, what will be excluded or included in coverages. That single decision makes them a regulatory force, as powerful in some cases as government, but moving at the speed of business.
How so? Break that down for us.
Sure. So if you can't insure something, you can't raise money for it from any source. So whether it's banking, the largest money manager on the planet, or insurance companies, the second largest money managers on the planet, or anything else downstream, if you can't insure something, you can't raise capital. And in a market economy, what gets funded gets done. What gets insured gets funded. Without insurance, no projects gets built, no companies scale and accelerate. It is the foundation of what allows scale in a market. And so when you have cases of it's easy to get insurance and it's easier to get funded, then things have a tailwind. When you have scenarios that it's harder to insure something, or it's conditional to insure something, or insurance excludes certain liabilities related to a business activity, that shifts the entire dynamic of how that activity can or cannot operate.
Yeah, it's interesting. And I had a friend or a colleague who, when I told them that I was interviewing you for the show, it's like, yeah, and ask him what's going on with insurance. Like, it's just wild, with insurance in general is just in the news as well, not necessarily related to what we're talking about here, but it is related, right? They're pulling out of markets. California, you can't get your house insured, your car insured. What's kind of the state? Do you have any insights there?
I don't profess to be the leading expert on it, but there are some that say, like, we're looking at the potential collapse of the insurance market. And there's a grave irony here where insurance companies are insuring assets on one side, take real estate, houses, and they're also investing in and insuring activities like the expansion of fossil fuels that are increasing the frequency and severity of the events that are often destroying those assets. So we have this kind of negative vicious cycle right now, which is ironic, but yeah, it's we have insurance companies that are pulling out of markets, losing a lot of money in markets. Those activities of investing in and underwriting the activities that are accelerating climate change has the effect of raising the cost of insurance, decreasing the access to insurance, and ultimately, for many of our organizations that are really fighting the climate fight or social justice conscious, they're essentially unknowingly funding and supporting those activities that undermine their efforts and their missions as it relates to sustainability.
Yeah, it's interesting. So, I mean, you might argue that on one side of their business, they're actually attacking the other side of their business. You know, like you said, it's on both sides of the balance sheet. Really interesting, and almost hard to wrap your head around. To me, it reminds me of like in Excel. If you're an Excel fan, it's like a circular reference error when you're like, oh, you can't pull that number from that number that's already in your equation, right? They've got an error that's popping up. It feels like.
Yeah, and what happens is what's I think has been fascinating about this whole climate finance journey for most of us individually, for most organizations and our organizations, this whole area of finance is not thought about from a sustainable supply chain perspective. It's just like the stuff you have to do. And some people would consider insurance a grudge spend, if not just an administrative cost, where it's just very transactional and it's very indiscriminate the way we are selecting, or let's say the ethos with which we're selecting those partners. And yet there's nothing more powerful you can do to undermine your mission than to fund the things that you disagree with.
Yeah. I know you mentioned financial supply chain, and I don't know if that was on your website, because I was also looking at the Carbon Bankroll website, so I don't know where it was, maybe on both. But that idea to me is really fascinating, because you're saying that, we know there is work that needs to be done in our supply chains, and that's a big effort right now in sustainability, right? Not just focusing on your own house, your tier 1, tier 2 emissions, diving into supplier emissions and supplier impacts, traceability, transparency. But you're saying that same work needs to be done. There's a supply chain associated with your finances, essentially, right?
That's right. That's right. And I would say it's one of the most powerful areas we can impact.
Yeah.
Because market economy, back to what I said in the beginning, what gets funded gets done, and what gets insured can get funded and operate. And so, it's one thing to talk about where are we reducing our carbon footprint here and there, but taking these systems changing actions that have the potential to redirect and recost and reevaluate the ways that the economy operates and the longer term cost to nature, cost to environment, cost from a social justice perspective. Those big deal systems change level things are controlled in many cases by finance and by markets, by what the market's demanding.
And it goes back to that opening line where you've got built this movement really to try to protect our world, but sort of harnessing through the power of insurance. There are a whole bunch of different ways to do it. You're using insurance, and I want you, Brad, I want to give you this opportunity. Like, let's maybe rewind a minute here and how does it work? How does Premiums for the Planet work? How do people get involved? What's the model like? Take it from there. Because before I let you, I've heard that you describe it as, and you just alluded to this, it's the easiest lever in climate action. So give us a breakdown of how Premiums for the Planet works.
Sure. So, going back to that first premise, we worked in banking for a short but powerful time, organizing a movement as best one can around banking and organizations understanding banking as part of a sustainable supply chain. And changing your bank is difficult. It's something that organizations have to do on their own. It's the work of it is internal. So it's a hard lift, but we were able to make a lot of progress. But when we looked at insurance, understanding that, first of all, finance often is still not in the sustainability conversation. And even some of the most sophisticated, most climate, social justice forward organizations, the role of finance in many cases, they still are kind of left out. They're not culturally belonging in the conversation yet. And so they still often perceive that job as they're the single bottom line. Their involvement in climate finance is just to approve or disapprove the chief sustainability officer's line item budgets for what they want to do. And we said, okay, so if we want to engage finance in a different way, how do we make something that's very easy? How do we lead with a business proposition as opposed to this stereotype that we really need to overcome, which is if I say sustainability, you hear sacrifice and that you're going to pay more and get less.
Right.
That's not going to change the world at the pace that we need.
That's right.
So we built Premiums for the Planet, taking advantage of the ecosystem, the value chain of insurance, which is you have on one side, and I'll simplify it, the policyholder, which is all of us buying insurance. Mm-hmm. On the other end of it, simplified, you have the insurance carrier, which is receiving those trillions of dollars annually in insurance premiums and investing them and deciding what to underwrite. That's our sort of focus of change that we want to make. In the middle, you have the brokerage, which in that incumbent ecosystem exists to aggregate insurance spend and to use it for, right now, a very single bottom line purpose. So we looked at it and said, okay, we can create a program that takes no extra effort, adds no cost, actually adds value to the brand and value to the underlying economics. So if we can create a scenario for a CFO that says, wait, by just changing a very substitutable function, which is my brokerage, I can become part of a visible climate action community where my insurance spend is aggregated toward driving a market signal and a demand for systems change. And we not only can leverage better service and better economics in making that choice, but also demonstrate and be rewarded from the advantage of better stewards being a better than average risk ultimately. So we can reduce reputational risk. We can add brand value to money that right now is seen as purely administrative costs by being part of a visible climate action community. And all it takes is doing what I already do, which is using an insurance broker to handle our insurance that's going to deliver, in this case, equal or better service and economics.
Yeah. So you listed some great, I think, benefits there. So it feels like it's all the upside. And when you mentioned, I know change is hard, right? Wherever you're at, and especially in your organization, if you're the head of sustainability and you start talking about changing policies or changing banks, people are like, hey, stay in your lane. I wonder, are there challenges though? Because I know with a bank, you're going to have a relationship, right? And so that's where it gets tough too. It's a more intimate relationship, perhaps. I don't know enough about writing or buying insurance premiums. There's not as much of a relationship there. Is that what you're saying? Because you're going through a brokerage anyway. So it's sort of, is that an easier lift?
Well, so what makes it easier? So I would say just like banking, insurance is often a relationship business. The functions that brokerage role plays, as I said, is in many, almost all cases, very substitutable. It's a relationship with the service being hard to differentiate for insurance brokerages. And typically that policyholder is pretty disconnected from the insurance carrier. So what we can do essentially by building the brokerage platform where our members come in, so the way organizations work with us is we match them with an insurance brokerage that's part of a curated alliance of brokers that we have decided will and continue to enhance, that provides better service and can be equal or better in sophistication and capability, that we will match our members with that brokerage ally. When they become part of that brokerage ecosystem, that gives us purview over their insurance spend. And at the same time, they become members of Premiums for the Planet, which is a visible community, somewhat like a 1% for the Planet or a Protect Our Winners or Conservation Alliance, where organizations believe in a certain cause. They want to be visibly affiliated with the impact that they're having on that cause through these nonprofit organizations. So they become a member of Premiums for the Planet. just by changing their broker. So in essence, what is enabled is the organization can continue to do what it always has done related to insurance. They just work with a broker and get insurance. But now that money that they're spending on insurance becomes part of this climate action movement, and so we can do all the work. The difference is when we would go to the CFOs before and say, do you understand what's happening with banking? And you really got to change your bank. That's like, oh my gosh, that's really complicated. It's operationally entangled, and
right.
I have to do that. And what about my department doesn't have time? And that's like a whole other job. And in insurance, we can say, well, no, you just continue to do what you did. We're gonna hook you up with an equal or better brokerage that fits your organization. You're going to do the same thing you did yesterday. We're going to do all the work, and we're going to make you look great for it.
And so those premiums that are being paid now, will they be invested in certain projects? Like, is there a plus side, or is it just kind of, retractive, right, where it's taking away and just not investing in certain things? Or is it both things?
It's actually, our approach is a little bit different. There's probably a place for, let's say, ring fencing certain groups of insurance premiums or certain funds, but we look at it and say, we need more action than that. We need to create market demand for insurance carriers that behave differently in a range of areas, what they invest in, but maybe more importantly, what they're pressuring transition within through the way they invest or underwrite, and how they're supporting the creation of insurance products that accelerate the adoption of sustainable processes, materials, technologies. And so we look at the entire landscape of insurance carriers, working to rate and rank their overall positioning from a sustainability perspective, bringing together a marketplace that then moves to support the leaders that are the most sustainable in the insurance carrier landscape, and in doing so create a competitive race to the top. So ultimately, this is about organizing the insurance spend of climate conscious, socially justice conscious organizations to then create a market opportunity that causes insurers to start to think about their sustainability positioning as a single bottom line imperative for their future success and access to a growing, coordinated, strategic market force that wants to see them progress.
Who were some of the early adopters? Who came on early to in terms of membership?
Yeah, so amazing organizations across the board, folks like Burton, Outside Inc., Climate First Bank, Jones Snowboards, Peak Design, Sunski, Nidecker, Atmos.
Wow.
It's been amazing.
Yeah.
On the for-profit organization side, just tremendous support from a lot of really thought-leading climate-conscious organizations. And then from an NGO, nonprofit perspective, we have incredible cause partners that are not only members, but also help galvanize and movement build with us. So 1% for the Planet and Protect Our Winters and the Conservation Alliance and Project Drawdown and Climate Neutral, which is now Change Climate, and just, an amazing array of nonprofit partners.
Was it a tough sell? Like, did it take a long time? Did it take a lot of convincing? Or once you kind of brought the story to those organizations, and I'm sure the list continues to grow, what are the challenges, I guess, is my question? Or is it once people find out about you, they just go, yeah, of course, sign me up. Let's go.
Yeah, thank you. Great question. For the most part, I think many people have the same reaction that I had. When you see it, you can't unsee it. And then you just want to know, for a lot of these climate finance areas, solutions are harder or they don't exist. And so when you see it, you can't unsee it. And this is really easy. So I'd say the vast majority, it's very quick and there are very few objections, and organizations come in and they've experienced not just bottom line economic benefits and service benefits on their fundamental basic insurance programs through the curation that we do with our brokerage partners, but also they're on mission now. The spend that was indiscriminate now has impact and mission alignment and brand value. So really it's been pretty fast and pretty easy. Now that when you get to larger and larger organizations with more and more complicated global risk programs, uh, transition can be slower.
Yeah.
But I think from a fundamental value proposition perspective and adoption, it's been quite humbling.
And we talked about this when kind of prepping for our conversation, so the way I look at it, if we're working with our clients who might have a climate strategy, we already know the work that they're doing. Once they go to write their annual report, they have to gather up all the stories and talk about the progress they're making throughout their supply chain, right? To tackle emissions on site, tackle their tier 1 and tier 2, their scope 1 and scope 2 emissions, their scope 3 emissions, of course. That's been sort of the elusive, hard part to do. But there are a lot of companies who are really putting in that effort and putting people in place, dedicating resources, working with their suppliers, doing supplier training, focusing on science-based targets. And what I'm interested in this from that aspect is I know that work is long, it's cumbersome, it's tedious, and they're talking about, and a lot of companies are putting out ambitious goals that they're not hitting, frankly. But your kind of perspective is that there's an easier way to do it. But we had this interesting conversation. So tell me about that. If I just sort of say, hey, there's an easier lever to pull, if you will, but maybe it's not as simple as that. What's your thought on that?
Yeah, I mean, what I said before really applies. There's a few, I think, threads to this conversation, right? One is, if every time we hear the word sustainability, what we actually are hearing is sacrifice, that doesn't work. So I would say to anybody who is building an impact, whether it's an enterprise, a movement, think about how do we approach this from what makes a market economy work as a starting point. How do we eliminate that stereotype and create solutions where there's truly a better product, a better program, a better business value. So you're not running against the stream of capitalism and how the market mindset works. So that's a fundamental premise that this is built upon. It's take something that seems indiscriminate and administrative, but is really critical, and add to it greater value, greater reward and satisfaction, and visibility, so that changing your insurance needs to be far more rewarding than hearing the clink of a can in the bottom of the recycling bin. Because the impact, respectively, of each is dramatically different.
Right.
But yet right now it's more satisfying to hear that clink than it is to address your insurance. So fundamentally, first, it's make that easy, make it valuable, not expensive, and align what that means from the decision maker's perspective. The second underlying concept is there are a lot of things right now. Look, we need to be doing all of the things that we're doing. We need to be inching away at our scope 3 and our scope 2 and our scope. Every change, incremental or wholesale, is massive and important. But if we restrict ourselves right now to just the things that we know how to measure, or that we have the available information to measure, if we're all incrementally in our silos working toward our individual footprint reductions, that's important. But what we're talking about is it's a game at a whole different level of magnitude, which is fundamentally there are the mechanisms of a market economy and the way we do things in our society that need to shift. Big picture, like insurance, one of I think the biggest throttles and directors, it's the apex director of a market economy. So absolutely keep focusing on scope 1, 2, and 3. And if we can achieve systems change to have the insurance industry as a whole start to be an ally in climate and social justice and use their massive influence to help guide us away from the cliff, then that's it may not our focus isn't on, well, let's go measure that. It's okay, that one's pretty obvious. We need to do those big systems change level things. And that's what we exist to do.
When it comes to kind of following up on that very statement, when it comes to the insurance industry or the banking industry as a whole, how's that going? What do you see that progress being made? Is it within sight? Is that a 2-year kind of transition plan? What's the progress there?
It is a big, to use a terrible analogy, it's a big tanker to turn, right? All of these. And they are largely single bottom line driven industries.
Yeah.
Organizations whose incentives and practices are really entrenched. And in fairness, they're operating within a system that has been created that causes them to be where they're at. And so our approach to this is we need collective action. We have to organize and strategically direct, coordinate, sustain a market force that works within how our system works to help them shift. So it's a longer game. I'm super inspired by the individuals and organizations that are working on this, the kind of support and folks that have come into our ecosystem and been champions of our work and connectors and advisors. And it is humbling to see the really successful, powerful, impassioned people that are truly on this purpose, and that gives me optimism. It's also been interesting to see, even in early stages, the reaction of, let's say, the insurance industry to what we're doing. There's a sense that this is really helpful, right? Because if you're an insurance company right now, what we hear from the industry is people who are coming to us in insurers, and asking for sustainability. It's all net loss for us. If we look at it from a single bottom line perspective, operating within the system that we're operating, we have fiduciaries and shareholders and stakeholders. You're asking us to stop insuring oil and gas. You're asking us to stop investing in these, in a range of different things. You're asking us to change behaviors that, if that's all you're asking us to do, it's a net negative. What Premiums for the Planet exists to do is organize and bring an opportunity. We're saying we need to shift some behaviors, and we are also creating a market opportunity that inspires innovation and creates an upside conversation that we can have with stakeholders about the future of the economy and where the market is moving. And if we can shift the demand in the market, which is what we exist to organize and to do, then we operate within how our market economy operates, and we create a natural shift. So I am very hopeful we can do it. It is not a short, it's not a short journey, but all of the things are in motion and happening that make it possible.
Well, let's try to kind of take it to the nuts and bolts level for somebody. If they're a head of sustainability at their company, and we had to package this up nicely, sort of give a pitch to them on what they can use to go to their CFO and to try to, get them to take a call with you. How do you get them to join the movement, right? You're saying, don't let your insurance undermine your values and mission. And I like this quote too. I'm going to jump in here with this one that you have on your website. The financial system can be one of two things: a driver of sustainable growth or a driver of climate chaos. It's Peter Gilcase, a Rockefeller heir and the co-founder of Bank Forward. But what are some, with that said, you can go to your CFO with lines like that, but what data points do they need to have handy? What questions do they need to ask at their company? Where do they get started? Where do they go to their CFO with?
I think anytime you're going to the finance department, you lead with the things that finance departments in this moment care most about, which is, hey, if there is a way to not add any cost, to actually improve the performance of your insurance program, and in doing that, to add brand value, reduce reputational risk, and look pretty good, from a sustainability perspective, would you be open to that? And I think it's lead with, look, this is kind of a no-brainer. What you're going to get is better on all the things that you care about, and just as easy, if not easier, work. And in doing that, you're going to be a hero.
Yeah.
You're going to do something massive, thought-leading, influential, and you're going to reduce reputational risk, because climate finance awareness is inevitable. It is not going back in the bag.
Right.
Consumers, organizations, we're seeing the power of, so there's this great quote. If you want to do something evil, hide it in something boring. And I'm not saying that there's evil in our financial system. I'm saying that it has developed where it is for all of the demand that has brought it here. and now we need something different. And so it's to say the cat's out of the bag. Like, this is now in plain sight, increasing awareness that this is one of the most important things we can do. So get ahead of it. I would be talking to this, like, let's get ahead of this potential reputational risk. Let's take advantage of something that costs us nothing and takes no effort, but increases the brand value of money we're going to spend anyway.
Yeah.
And it's kind of a no-brainer. And then I would just want to reinforce that we can do this. You know, the CFO message is, this is easy and adds value. I think the broader message is, we can do this, and there's probably no bigger system change imperative that we have to redirect the course of things right now as it relates to climate.
Wow, that's big. And I wonder, what questions do you typically hear back from a CFO? Do you have any where a CFO might go, yeah, well, what, sort of the old classic, what about, like, well, what about this, or what about that? Or, what are they typically asking? What do we need to be prepared for?
They'll have questions around, so because of that stereotype, they'll assume, well, anything that we're talking about that adds sustainability it's got to cost more. Like, even when you look them in the face and you say, no, it actually costs the same or less, and you get more, there's still just this implicit assumption, like, okay, but it's got to cost more somewhere. And so I think it's overcoming that inaccurate perception. The second question is really from the CFO's perspective. Well, okay, but can they really do it?
Yeah.
Like, isn't this some startup thing? And the answer is no. Like, we've curated best in class, well-established, super sophisticated, in many cases, global insurance brokerage with capabilities that can go anywhere with any kind of, we've very deliberately brought together an alliance of brokerage capabilities that is built to impress and built to exceed expectations, because that's the foundation of how a movement actually builds. Everybody's got to feel like this was awesome.
Yeah.
And impactful. So those are the kinds of things. It's just the nuts and bolts of, well, can they really do this? Does it really not cost any more? But once you get past those basics and they understand the nuances of the model, they're like, oh yeah, that totally makes sense. Why wouldn't we do that?
Yeah. Well, thanks, Brad. Thanks for that. And thanks for the breakdown. Thanks for all the work you're doing. It's really, really interesting. Sounds very easy to do. So we'll put all the links in there so that our listeners can go and learn more about the work that you're doing, your partners that you're working with, and just learn more about this topic. Anything else though you'd like to leave our listeners with before we jump here?
I think that's really it. We can do this. Think insurance, obviously that's our focus, but also 401k. I mean, go to our site, look at Carbon Collective and get your 401k greened up. Look at amazing bank partners we have, like Beneficial State Bank, Climate First Bank, Amalgamated Bank, Atmos. Clean up your banking if you can. Look at your investments and your retirements. Just this financial lever is probably the biggest thing we have. And I guess it's just an impassioned plea to the finance organizations. You are a part of this conversation. You can be a hero, and we need you. We need you.
Thanks so much, Brad. Last question that I want to squeeze in here, though, for you is, you're focused on financed emissions, climate finance. Is there another topic that, if you sort of had to say, and if you had to reach out to sustainability professionals to say, make sure this is on your radar as well, is there anything else that comes to mind? Or is this sort of like, this is the main focus? I know there's so many, but I always try to drill in and see if there's one other thing that you're really passionate about.
So, this morning we were in a conversation with Brian O'Hanlon from the Rocky Mountain Institute's Center for Climate Aligned Finance. He heads that department, and it's fascinating the kinds of conversations that we get into. And I mean, there are so many fascinating areas. Like, what is the reality on carbon removal? Where is that an asset and an opportunity? Where is it a threat or a challenge? This paradigm this morning between the importance of addressing textiles and the recyclability of textiles, and are we going to actually get plastic out of textiles that allow it to be recyclable? Or is it that we need to figure out a recycling mechanism that allows us to address plastic in textiles, or both? So, oh my gosh, it's such a awesome time to be in this space. It's the biggest challenge maybe humanity has ever faced. And that's scary sometimes. And it's also fascinating and full of opportunity and incredible innovation and just really thought-provoking conversation. That it's really energizing to be a part of this moment. And so many different topics. I'm sure I probably can't give you just one.
No, that's good. And that's it. But that's exactly it. It's there's so much to be done. It's such exciting work. There's innovation, there's new technologies, and it just feels good. So this is the place to be. This is why we do it. So thank you, Brad. Thanks for being here. Thanks for all your time and effort. And we'll catch up soon, because there's more questions I could ask you. So I want to follow up with you on another one. So thanks for everything, Brad. We'll talk to you later.
Thanks, Derek.
Hey, thanks for checking out our show today. This show was produced by the team at thinkPARALLAX, a sustainability and communications agency with 2 decades of experience working with companies at every stage of the sustainability journey. We are experts at assessing where a company is today, defining a North Star, and developing a roadmap to get there. If your team needs sustainability guidance or training, or you have a recommendation for a guest or a topic on the show, visit us at thinkparallax.com. We'd love to hear from you.